Good morning and welcome to the World First Weekly Report. Well, over the last week we've seen the Aussie dollar rally to new highs against the Aussie US dollar. The record was hit this morning at 4 a.m. When it touched on $1.0335. Furthermore, the Aussie gains were extended across the other currency crosses, with both the Aussie pound and the Aussie euro performing well. The reason for the gains, this has largely been off the back of some positive data out of the US, which highlights a strengthening recovery there. The economic data did have the characteristics of the fits and starts that we're used to. There was a strong GDP figure, a strong consumer expenditure figure. However, on the flip side, housing data and jobless claims figures were negative to the downside. On the supporting the US recovery, we've seen treasuries fall really for 9 of the last 10 trading days. This is highlighting how the markets are supporting the US recovery. They're getting more confidence and more conviction that the US recovery will continue, and as a result we've seen the settings available for equity markets to hike, and we've also seen the Aussie follow suit as more people get into high yielding currencies. In the Eurozone, we've had a lot of news out of Portugal over the last week, what we're calling here the Portugal trifecta. In Portugal, we had the Prime Minister there resign. His austerity measures didn't get passed through Parliament, and as a result, he resigns. Furthermore, the recent relief program, which comes into effect in 2013, has some doubts attached to whether current bondholders will be protected. And to continue the sovereign debt woes in Portugal, we also saw the S&P 500 downgrade their debt to the lowest investment grade possible, while at the same time downgrading Greece's debt to the third level below investment grade, so really highlighting a bit of a debt basket case there. Furthermore, adding to the complexity, Jean-Claude Trichet has come out and said that they will be raising interest rates above the current 1% level, and he said that is imminent and could happen as soon as next week, which is obviously going to play havoc with the recovery for those peripheral countries. Locally, the equity markets, both locally and abroad, have been strong. In the US, we've seen the S&P 500, that barometer for risk, put on 2.36% of weight over the last 5 days. That's off the back of obviously the good GDP figures and some good M&A activity in the US. Furthermore, the Aussie market, the ASX 200, has rallied. That's put on 3.6% over the last 5 days. That's off the back of BHP announcing that they'll be spending $12 billion in Australia to extend their iron ore and coal production, and furthermore there has been some biopharmaceutical takeover talk. This is highlighting the increase in risk appetite, and with that increase in risk appetite, obviously we're going to see increasing performance in the Aussie dollar. If you'd like an update on the market, or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.